We are seeing a bloodbath in the markets today. Tech getting absolutely crushed while crypto continues to bleed. We'll be discussing all of that and much more today on Money Never Sleeps. Thanks for joining us, everybody. As we get going, do us a favor, hit the like button. If you haven't yet, subscribe to our channel. Remember, nothing that we say is financial advice, so please do your own research for making any sort of trades. Kev, it's good to see you again, buddy. We saw a nice rip up in the crypto market last week, but since then, things have started to come back to earth a little bit. We see Bitcoin off its recent high of 69.5K at about 66K right now. ETH continues to be an absolute disaster, reached as high as 2768, back down under 2500. Meanwhile, Sol is actually ripping at the moment, up to almost 171. So positive on the day. One of the bigger surprises in the market right now. Meanwhile, equities getting crushed pretty much across the board. NASDAQ down 1.75% on the day. Some of the leaders that are leading it down: Nvidia 3% lower, Apple 2.7%, Amazon 2.6%. Coinbase moving with crypto down almost 6% on the day. McDonald's rebounding a little bit after yesterday's sell-off with the news that they've gotten some people sick and even killed a guy, unfortunately, due to E. coli from their quarter pounders. Trump being at McDonald's and then a few days later this happening makes you think. It really makes you think. But good to talk to you, my man. How are you feeling about the state of the markets?
I'm doing good. I think the thing that I've been focusing on, and honestly, I've been so busy, I have not been looking at the markets, the charts itself, as closely as I used to when I had a lot of free time. But now that we're getting back into, closer to the election, closer to, we're in the rate cut era. There's things that are just not passing the smell test, and I'm looking at them and I'm like, okay, these three charts are the only three things that matter right now, and everything else is just noise until we get to the date where these three charts do something really important, and I think they're all going to do it together. Those three charts are the reverse repo, the bank term funding program, and interchangeably, you could say the DXY in treasuries are kind of one and the same. But those three are the most important things to be watching, and they're all screaming some pretty important signals while equities continue to rip up. Maybe not today, but there is some variance when we look at those charts, given how it's performed prior to today and today, given some of those price actions. So that's kind of been my main focus. I am happy to see Bitcoin go up that high because I know a lot of people definitely think that we're going to the moon again, and we're starting to see all those YouTubers who are saying, like, is this a new bull run? Or is this new alt season? I'm like, I don't know. Have fucking alt's done anything since Bitcoin got this damn ETF? No. ETH is performing like shit. The only one that's doing good right now is Solana, like you said. And I should throw BNB in there too, right? Seems like those two, along with Bitcoin, have the most strength across the entire crypto market. But that makes me believe that maybe crypto isn't the most honest of what do you call it? Markets. Yeah, I was trying to think of the word. I'm brain dead right now. But yeah, we're talking about Sol and BNB. I've had my problems with them in the past, but they're going to do what they're going to do, and there's nothing we can do to fight it.
We're also in the midst of earnings week. It's a lighter week on the economic data front. We did get some housing data this morning. No surprise, the housing market has definitely slowed down. Existing home sales year over year down 1%. I mean, mortgages are back up. They're moving up to they're over 7% again. So of course no one's fucking buying right now. Who the hell wants to do that? So that's really on the economic data front, one of the main things. Next week is when it's going to get fun. We'll have PCE next Thursday. We'll have but there'll be the October jobs report on Friday week, before the election. Things are about to get very weird out here. We're seeing all sorts of people arguing on Twitter over whose polling and projections are accurate. Are the betting markets accurate? I mean, no one knows. Everyone's just out looking for clicks to collect a paycheck from Uncle Elon there. So weird time for sure. Just over here hunkering down and continuing to just do less in a very volatile market. Let's take a look at, we kind of talked bigger picture here, but let's kind of dive into some of these stocks and look at the direction they're heading. We'll get to crypto after that. We see the NASDAQ coming back from, it was approaching all-time highs, since pulled back from there. The S&P was at all-time highs not too long ago. That's retraced a little bit. I think what some people are wondering is this just a temporary breather before we move up? Is this the markets de-risking ahead of the election, or is this the beginning of a bigger pullback? And I'm curious where you stand on that.
Yeah, so we got to kind of talk about different scenarios, right? Obviously, a scenario if Kamala were to win, a scenario if Trump were to win, or a scenario where we just don't know who the president is for a period of time. It's very possible we could get something.
Yeah, that happened back in 2020. It took, the election was on Tuesday. We didn't know till Saturday who it was.
Yeah.
So it wouldn't be shocking if that happened again.
Right. And we have to understand that maybe markets are very scared about that possibility too. It's something that we just have to keep in mind, right? This is something that we've seen in the past. Back in 2020, it didn't matter because the inflation machine was burning and churning, and we were seeing a lot of money, both monetary and fiscal, being pumped into the system. We're not at that point right now. People can argue that there's QE. I don't believe that there's QE. I think there's some QE out there, but I do think that we are seeing some of that pull back. So what I'm looking at is right now, what these markets are kind of anticipating, you could expect a bit of a pullback before the election, but you can also anticipate if there is going to be any type of face melting rally, I think it comes before the election. I don't think it comes after. I think a lot of people are speculating that if Trump wins, the market's going to continue to go higher because people are going to get excited. If Kamala wins, people are a little bit afraid. I think it's kind of like a falsehood thinking or bad mindset to think that if Trump wins, that the markets are going to rip higher. We do know that with Republican candidates, we do tend to see a lot less government spending. Kind of makes sense that you wouldn't see that much money being thrown into the equity market like you're seeing now, or if you're seeing in like Japan or in Asia and some of these other countries where you're just seeing a lot of stimulus. You kind of tend to see that with a Democratic candidate. Trump's just kind of the anomaly because of what happened in 2020, right? Him and Congress are allowed that stimulus printing, and that's why we're here. But we tend to see Democrats spend a lot more, which is really good for business, and that tends to be inflationary. So that's something that we have to kind of keep in mind. But the thing that's really interesting here, and it kind of goes into what I was talking about before the show started, and I want to share my screen, is what's going on with the liquidity in the system right now. So we're going to look at the reverse repo, and this is on the daily. It had a really good day today in terms of bouncing back from the lows. It got a double bottom right here. Pull up my drawing thing right there. There we go, double bottom. Let's go to the monthly on this, and we can see how much that this has just dropped in the past month. Well, I didn't do that. I didn't mean that. In the past month. In the past month, the reverse repo has dropped 41.83%. Before today, it was 48.5% or so. So we're seeing a lot of liquidity being drained from the system. Kind of makes sense that it's bouncing back to the upside today when the equity markets are down. There's not necessarily anyone throwing cash or capital into it to see that market bounce. But when we were seeing the market rally considerably higher, we were seeing the liquidity drained. You're seeing the money kind of hold up some of these equities, some of these stocks going into November. And with how fast this is draining, this is likely to drain in November. Whether it's before the election or after, it really depends on how bad the sell-off kind of is from those on the inside. People will obviously hold a lot of stock in some of these companies. The main one, obviously, is NVIDIA. I'm not going to go into depth about how Asia is kind of holding that one up and why it's important that they're holding that one up as the yen gets weaker against the U.S. dollar and the U.S. dollar continues to rise. That's the yen carry trade all over again, just rebuilding itself. So I guess we don't learn our lessons from some of that. But the other thing that we got to take a look at is, let me pull up the reverse repo. Let's look at the bank term funding program. We can expect a big move this week. So Thursday, I would expect that we're going to get some of that data. If I were assuming where we end up, we're probably looking at, what is this right here? Probably another $10 billion drain or so in this, but then after next week, it drops off pretty considerably. We're looking at something around $40 billion being drained out of the system. And, next week obviously is what, the 28th or so? Yeah, the 30th. So then 7 days after that, right around the election time, we're going to see another drain, which should be about 40 billion or so. And then the week after the election, I think should be zero or near zero. And that is liquidity being pulled from the system. That is money that the banks cannot access from the Fed. We're going to start seeing a lot of people panic. And that's why we're seeing the DXY right now kind of rally significantly. I know I talked about this in the previous shows, but I continue to hit home on this because it makes the most sense as to why we're seeing the dollar just rally as hard as it currently is. I'm not even pulling up on the right screen right now. Let's go to scoreboard. And let's go to DXY. Yeah, right. We're looking at this on the weekly. The DXY's had 4 green weeks in a row. And it's, finally finding some resistance on this triangle right here. If I were to assume what's going to happen, very similar to the VIX, I think the dollar breaks out here. I think the dollar continues to push up, and maybe it goes higher than 114. Maybe that 120 level that we were talking about kind of comes into play over a period of time. Now, the question is, why would this happen? Well, the number one reason I could believe that this would happen is that there is a liquidity crisis upon us that we don't know about, that we're not talking about. And this kind of comes into play with what we're seeing in the reverse repo, in the bank term funding program, what we're seeing in treasuries. I'm seeing a lot of selling of treasuries, and we can take a look at that right now too. If we look down, where am I? Just past them. Yeah. We're seeing the 20-year, obviously the 10-year. I'm not even on the right. I have too many trading views open right now. I'm looking at a line graphs and I need candles. I'm like, what the fuck's happening here? Yeah, but we can see when I pull in here, the percentage rate has been increasing since early September, increasing 7-year, 6-month. Shorter time frames are not necessarily doing too much, but it's mainly where are we? Right here. 2-year going up again. These are these duration treasuries that are being sold off, debt from probably Asia, most likely China and Japan, that we're seeing kind of allow some of that money to flow back into their stocks, into their equities, and hold up the prices. For what? I don't know. The only thing I can say is the election makes the most amount of sense, right? But with that being said, that means that the U.S. is also battling extremely hard to make sure that nothing looks bad and nothing happens prior to the election. So that's why we're seeing these facilities drained. They're helping out the banks. But it also seems like they're not helping beyond allowing this liquidity that currently existed to just be drained. So what that tells me is that we should expect something to happen in November. I don't know what it could be. Maybe it's a bank failure. We had one last week. No one talked about it in Omaha, but it's not necessarily out of the realm of possibility that we start to see the dollar rally hard here as liquidity drains from the system. And then that kind of pullback that we're seeing today, and in the NASDAQ, we're seeing kind of this rollover. It's easier to see on the daily. Let me just pull that up. Yeah, it's very possible that we just don't put in a new all-time high for the NASDAQ and we start to roll over here. Might not be a bad rollover, right? At first, it might seem like, oh, okay, 2-3% down. The election's here. It's like, it's okay. We're going to rally once we get the results. What if it doesn't? What if it's like you wake up, maybe not the week of the election, but that Monday following it? What if the market's down like 8% and you just don't know why? And then you start to see it drop considerably. You see the repo, you see the bank term funding program at zero. And it's like, well, shit, who's going to buy this market? Everyone's in at the top. Over leverage. Things are moving faster than you can kind of react to. That's the margin call situation. And that's the yen carry trade unwind as the dollar kind of goes up a lot higher. But then you start to see that even though the yen is weak, you start to see the equities that they threw all their money in kind of just be pulled down significantly, i.e. NVIDIA, right? NVIDIA right now sitting at 138, kind of hit all-time highs. What if it doesn't go any higher than that? What if this little push to the upside is a full-on bull trap? People got excited, got all-time highs, you're breaking out of it. What if this thing just rolls over? We don't know. It's kind of hard to push that stock up or any other stock when there's just nobody willing to buy it. And the only reason people are buying it right now is fear that they're going to get liquidated in some of these trades that are happening in the Forex market. So I know that's kind of high level we're talking about it, but it's something that I think we are literally sitting on. Like, this is what, October 23rd today? The election is the 5th. November 10th, 11th, we could be at a very different feel and vibe in this market that just absolutely sounds. I hate that I said vibe. I sound like Kyle Scanlon. A very different. The vibe session's back, guys. Man, what the fuck was that?
Oh boy,
But
that I'll talk for you. I'll let you stop talking for a second, and I'll take it over for a few minutes here. There's a reason that the smartest investors, hedge fund managers, whatever, have moved to either cash like Warren Buffett, or many have moved to gold, commodities, because they think that inflation is going to have a resurgence. And it's kind of hard to disagree with them. With the latest inflation reports we've seen have shown that it's hit a wall and it's starting to tick back up a little bit. The Beige Book came out today, and the hurricanes in the South are going to lead to increased commodity prices there, boosting inflation. We had the dock workers stuff on the East Coast. That's just a temporary like patchwork at the moment. Like that could start back up again in January, lead to more inflation. So, when you see some of these people, like you have to kind of be able to figure out who's full of shit or not. Like so many like fund managers will put out, we'll do interviews with Bloomberg and shit and be like, yeah, prices are high, but this is just a quick pullback before the next leg up. Whereas then you actually look underneath the hood a little bit, you see the earnings reports and went, hold on, then why are you sitting in all this cash, or why have you de-risked? So it's a really, the narratives are tough to parse through at the moment, right there, especially on the crypto side. And we'll get to crypto here in a second, but this narrative of, oh, we're back into October. We saw Bitcoin. This is just a temporary pullback on Bitcoin. Like it needed to take a breather. Like it did. I mean, let's be honest. Bitcoin took a big move up. It was, on Friday, the 11th, it was down at 60K. The day before that, actually, it wicked down to 58K. Next thing you know, it's at 69,000. So like this very well could be a much needed, like, take a deep breath for Bitcoin before it goes back and approaches 70 and maybe, toward all-time highs again. Or that could have been the local top that we saw. It's tough to figure out, and why you need to zoom out on this thing and like take that longer approach. And, for me, Bitcoin, I don't trade anything. So like, but for the most part, Bitcoin is not for trading, right? It's for, accumulating, holding on to, looking to sell when we're near tops, or, holding for the long term. But let's take a look at crypto. We saw Bitcoin dominance get over 59 last week. It's currently, it took a little bit of a hit, but now it's starting to churn back up toward 58.8. And maybe we see it breach 59 again here soon. When you're looking at Bitcoin dominance, do you think that we're seeing that little bit of a breather here? Or are you kind of in the same boat with TradFi of, you think it's something worse that could be coming in that, November 12th to 15th timeframe?
I think obviously Bitcoin is heavily correlated with TradFi now.
We got above that trend line for like a day or two, and now we're right back in it.
Well, here's the thing, right? That got a lot of people really excited, but a lot of idiots probably bought in. And I mean, idiots as in high leverage gamblers at that point. But you got rejected off of it, and it's like, what happens after you get rejected in the past? You come down a lot lower. So where do I think that Bitcoin's coming? Probably going to 51,000 again. It's just, it's a pattern that we've been in. I mean, you could have made a fuck ton of money in this little range right here, right? You came down here 58, went up to 71, came down. You had a couple of wicks below, but I mean, for the most part, you held support at 56, got rejected at 70, down to 55, up to 69, probably 51 next. That's my anticipation for crypto. Maybe Bitcoin dominance doesn't go any higher. The hard part about Bitcoin dominance too is that it includes stable coins, and obviously USDT dominance is going to be really strong if there is a bit of a sell-off, right? Without it, Bitcoin dominance is well over 60. That's just the fact of the matter. By saying that tells us that Bitcoin still remains to move the market the most out of any of the assets. Even though Sol and BNB are doing kind of their own thing, we have to kind of assume that the people who pump those are the ones that are currently holding it. The only thing that's going to tear those down is if they go bankrupt, or they just need to sell off for cash, because like I said, I think debt is coming back to haunt a lot of people. But if we look across the board in all of crypto, I mean, we look at the total market cap, still not pushing up higher, right? I mean, Bitcoin did a good job, but alts are not helping it in any way. You're just getting a bit of a retracement to the upside. Look at total 2, weak, completely weak across. You're not coming up to these high levels of 1.274 trillion. You could thank ETH for that, and obviously all of our other speculative shitcoins that pretty much helped move that price up there. Like a total 3 without ETH, you're barely hanging on. Like, this thing's probably going to get lost very soon, and not necessarily going to be a pretty drop. I mean, we're looking at 616 billion just right now. Where do I think this is probably going to go? Well, probably at least 46 billion, 465 billion, I should say. My bad, 465 billion, which is about a 25% drop in the total market cap of all altcoins, excluding ETH. But you look at Cardano and a lot of these other ones, trading sideways, right? This is crap. There's a continuation pattern. Patterns to the downside, probably going to go to the downside at some point. I mean, this is even funny here, just looking at Cardano. Look how overbought the stochastic RSI is, and look where it's gone. Absolutely nowhere. You can probably say the same thing for, you can say the same thing for AVAX, right? Actually, no, this one looks like it's probably going to break from this pattern too eventually. If this one was any type of precursor, let's see what else we got. Link, crap, same thing as AVAX, continuation pattern. ETH,
Ugh,
crap, same thing, right?
crap.
And then you look at something like Solana, and look how it's not that far from its high, this B wave that it put in, right? It's a lot higher than where freaking ETH was. If you look at that, I mean, shit, look, ETH was all the way up here in March, nowhere even near that. Then you look at BNB, just like Solana, trading kind of sideways near the top. A lot of people are holding those coins. Can't necessarily believe that they're the, what do you call it? They're free markets in any way. Maybe they are. I don't know. I don't have that information. But it doesn't seem like it when you see Bitcoin kind of holding this strong dominance over the rest of the alt market that just cannot perform as well, nearly as well as that, or as well as ETH or BNB. So what this tells me is that we're probably going to see alts bleed even more if Bitcoin drops to 51K. Dominance is still 58% right now, and that's with stables included, almost 59%. Could this go up higher if, say, stables absolutely go to shit? Absolutely, right? It's a very weird scenario. If there's nothing wrong with any liquidity amongst stablecoin treasuries, then Bitcoin dominance probably will come down a little bit, and you'll see the stablecoin dominance increase. If there is any trouble with it, then you're probably going to see Bitcoin dominance rise so fast across everything, because I think Bitcoin's ultimately, when people are afraid and they look at crypto, it's the one that's been through it all. This is the only thing it hasn't been through is a global recession. It was born from it, but maybe that's the one that they say is like, that's digital gold. I'm going to hold on to that shit. It always comes back, and that's just going to be my bet. Kind of the thoughts that I have in the crypto market right now.
It's a nice full circle story, right? Born out of a financial crisis and
heading into one.
The savior of people when we head into the next one. That's the story I think a lot of people are banking on.
Yeah, they're banking on it, and that the only person that's holding that fucking shit up is their Wall Street friends that they said that they didn't want to be in it. Now they need their money to keep their bags afloat. So I think it's a very funny story how people get attached to some of these projects, these equities, these cryptos, stocks, and then at the end of the day, it's like, well, do you really think it's going to save you? Because I don't think anything's going to save anybody at this point. I think just being smart and not being greedy at this point is probably going to be the best play. I did want to throw one theory at you that I saw online, and I kind of believe this. What if we do get, say, a stock market crash, right? Because we do know that debt's out of control. Debt for a lot of people is out of control. People are not paying their debts out, from consumers all the way to the top of these banks. They're just bleeding money, and they have to make good on those debts. They have to repay them. It's just been hard with rates being so elevated. What if we see a crash, and it's the perfect time for all these institutions, all these people to just refinance debt, and then you just start seeing the inflation machine just kick up again? I mean, that would benefit a lot of fucking people, would it not?
Yeah, I mean, those people are going to act in their own best interest. They're not going to think about anyone else. So
no, not at all. And
I don't know.
The best thing that really surprised me is, a lot of people are really upset about inflation, right? But then they're mad at these billionaires. But at the same time, the billionaires are like supporting, taxing them and everything like that. It's like, inflation is the best thing for a billionaire. Are you kidding me? They are making more money. It doesn't matter. Like, it literally does not matter if they make, if $2 billion is equal to $2 billion, or it's more like, $10 billion because of inflation, that money's still coming into them. People are still going to be spending that money. It's more, inflation just crushes the classes beneath them, right? That's something that just continues to widen the gap, and why we see, middle class turn to working class turn to the lower class. And I'm not talking about lower class like you got no class. I'm talking as in, just financials. You just have a lot less money than you once did. Um, but that's kind of a theory that I've been toying with for the past few days, and it's like that makes a lot of sense. And it also makes a lot of sense when I think about how many banks are really screwed, right? I told you guys I took a lot of my money out of Bank of America already. I still have my short positions on them. Warren Buffett's doing the same thing. Maybe not the short positions, but he definitely took out a lot of his Bank of America stock. We won't know for 3 months how much he sold since he got under that 10%. But it tells me that he thinks there probably is some type of liquidity crisis coming. Gold is saying that there's probably going to be some type of liquidity crisis. The dollar, all this stuff is just pointing to it. And the wild thing is, we might be weeks away from it. So I think this is going to be a fun few weeks. I don't think it's going to be a good few weeks, but it's going to be interesting to see how these markets react, because at the end of the day, the money's going to talk. And when it does, it's probably going to be screaming, because people are going to be just like, get me the fuck out of this right now.
All right, that is going to wrap it up for today. Appreciate those of you who joined us. We had some technical difficulties, but if you're watching this back on the replay, thank you for that. Hit the like button if you haven't yet. Subscribe, drop a comment, all of those things. We'll be back on Friday, talk through the latest in the markets. More earnings reports coming out today from Tesla. I believe we have Apple earnings tomorrow, so we'll be able to discuss those and then look ahead to an eventful week as well. So thanks, everybody. Have a great rest of your day. Stay safe out there, and we'll see you Friday.
Take care, everyone.